From the News Channel 5 Network, this is MorningLine.
And happy Wednesday, everybody. Thank you so much for joining us on MorningLine this morning. I'm Cuthbert Langely in for Nick Bears, who's off for a couple of days. Talking taxes. It's always a very popular subject here. We've got the phone lines open, ready to go if you have any questions. I'm joined right now with Dr. Friday, our tax expert. Thank you for joining us this morning, bright and early.
Bright and early, yes.
Yes. Well, we were saying that you got up early, ready to go this morning.
I was all ready. Got my Starbucks by 6 o'clock. I mean,
wow,
I was happening, yes.
Look at you go.
Got a chance to read some of my emails and those kind of things, which I'm sure I'm texting and stuff at 6 a.m. with my clients. I'm sure they're loving it.
Right. Well, you are 24-hour service right there.
It sounds like it. Yeah. It doesn't mean always going to happen. But.
Right. That's awesome. Well, we've got a lot of good things to get to this morning. Obviously, taxes can be confusing to a whole lot of people, myself included, who don't really understand how it all works, especially with the way markets have been these last couple of days.
You know, and a lot of times, I mean, there's two different sides. I mean, so if you're buying stock, individual stock, and I'm sure a lot of estate planners, and I am not one, I'm an enrolled agent, just so you know, I don't sell the stocks, but a lot of them tell you not to do that. But if you do, like say you went and brought Apple stock or something like that, and it's come down big time, and you sell, and you don't buy it again within 30 days, then you basically can claim that as a tax loss. Now, you're only going to get $3,000. So if you lost $300,000, you're only going to get $3,000 of it. So just remember, but it will roll forward. So hopefully you'll get gains to offset that.
And how complicated is that, you know, to keep a track of everything and then to, you know, claim it on your forms? How what process?
It's actually getting a lot easier because now brokers, you know, using any of the main broker houses, they actually will report the date of the sale, the date of the purchase, the cost of the sale, and the cost of purchase. So all that's being turned in actually to the IRS as well. So we're not having to track it down like it used to be.
Great to hear. And obviously, you know, tax season kind of far away at this point, but
not really, because September 15th is the deadline for corporations. So remember, we have a lot of people that procrastinate. So extensions are really popular. So September 15th if you have a corporation, and then October 15th for individuals that haven't filed their taxes yet. So we still are just finishing up the 2014 tax season.
That's crazy. Is there anything now we can start doing, you know, if we're waiting, you know, until obviously next tax season? Is there anything we can do now to start saving money a little bit?
Well, yeah, now's the perfect time to start looking, because a lot of times people start thinking about taxes in January, which is a little late to really make any changes unless you're going to put some money in an IRA or something like that. So yeah, right now is when you really want to sit down and look at your W-2 for one, or not your W-2, excuse me, your paycheck stubs. Look under where it says federal withholdings. If you're not seeing anything coming out, might want to talk to your employer, because sometimes you work 2 jobs, for example. A lot of people have to do 2 jobs nowadays. The second job is treating it like the first. So basically there could be 0 withholding, but when you add those together, you could end up with a tax problem. You know what I'm saying? Because now you're doubling. So you may have to go back to one of your employers and say, hey, I want to be single 0 with an extra $10 a month coming out. You need to compensate. But now's the time you want to start looking into that problem, not when you prepare your taxes and I have to come and say, oh, you owe $300 or $400, and you're sitting there going, I don't have it.
I ran into that problem last year. It was like the last day, and I was like, oh my gosh, I have $0 in my bank account.
It happens.
Yeah, absolutely. Well, we have Taylor on the line right now. We got some phone calls coming in. Remember, the number's on your screen right there, 737-7587. Taylor, good morning. This is Cuthbert. What's your question?
Yes, Cuthbert, and good morning to your guest. She's so talented. I just love when she's on.
Look at that. Happy Wednesday comment to you.
There you go. It's great. Even though it's named Friday, I'm taking it. Go for it.
I have a daughter that just got married, and I'm wondering, both she and her husband have pretty decent jobs, and so I'm wondering some things that maybe they need to do. I know they need to let the IRS or Social Security both know of the marriage, and instead of waiting to put it on their form at the last moment. I had another question, but I forgot.
That's all right.
All right, we got one.
The first question's easy. Well, when you talk about Social Security, you're right, because the Social Security Administration checks, or the IRS checks with the Social Security. So whatever last name you have, so if you get married and you haven't changed it with Social Security, you want to use your maiden name on your tax return, just so it doesn't cause, you won't be able to e-file. It'll get kicked back at you because your name doesn't match what the IRS has. More importantly, when you get married, The good news is divorce is the bad side. The marriage is the good side. So when you get married, normally most people are claiming single and zero. And then they get married. Don't immediately go and change to married and zero. Because the problem is you're going to be in a higher tax bracket. When you're both filing as single and zero, you both were at the lower possible tax bracket. When you merge, the second person or whoever's income is going to be taxed at a higher bracket than it was in the past. Because now you got two people making $30,000, which are basically in the 10 to 15% tax bracket. Now you've got a couple making 60, and the tax code's going to pick them up into the 15 or 20% tax bracket. So you're going to end up in a higher tax bracket. So just be careful. I would stay single and zero to the end of the first year. Then if you find out you've got this huge refund, obviously I don't like huge refunds. Government doesn't really pay interest, but I would then make an adjustment on just one person.
Okay, this is a question too, kind of going along with marriage. If you've been filing jointly, if you've been married for a little while, is there a way that you can start filing as married but have separate returns?
Yeah, married filing separately. In fact, I do that almost always for self-employed individuals because there's a risk to the other spouse that's not self-employed. Self-employed people have a tendency to have a higher audit possibility or not pay their taxes. So this way it shields the other spouse, male or female, on what it was. So yeah, the married filing separately is a choice, and you can start doing that. Just keep in mind that if you want to amend and go back to married, you can't do that. Most of the time the IRS will now allow an accepted amended return from married filing separately to married.
Okay. And there are a lot of new rules, new laws kind of coming into place regarding taxes. I think you and I were kind of talking about before the show. Can you kind of dive into that and kind of how that's going to shift things for people?
Well, okay, so a couple of the things you really want to look at is if you're a beneficiary or if you're an executor over an estate. One of the big things that came down just in the first week of August here is how we're supposed to treat the step up in basis or the basis. And what happens is when someone dies, you may inherit stock, you may inherit a lot of things, and even though the person may have paid very little at the time of death, we get to put a value at that point of whatever it's worth at that date of death. It used to be a lot of times we would kind of use property tax assessments, things that were already in the marketplace. The IRS came back and said, nope, we're not really agreeing with that. So we want appraisals. We want, a brokerage company to say, this is on this day, this is what the stock is worth. And then they want us to file a 706 form that's going to put all these cost bases and file it with the IRS. So when, let's say, a year later or 2 years, because a lot of times people have family members that may live in a house that's being used, that was the parents' house or something. Bottom line is when you decide to sell, they're going to match that cost basis. And if you're 25% off, they're going to audit up to 11 years back.
Wow, okay, that's good to know.
Yes. We don't like that word, audit or back.
Audit is not a good word at all. And when it comes down to Tennessee, it's a little bit different. This is kind of a question I had because I just moved here about a year ago, and no personal state income tax. Is that correct?
Well,
so that changes things.
You're
a little
right.
bit,
We have no income tax. We have a Halls tax, which is based on interest and dividends.
Right.
And there are things, if you're a sub-S corporation and you have distributions, there's some things in-state, but normally it has to do with out-of-state money coming in. But there is. But you're right. So it's really nice if you move from other states like California, where we came from originally. We save a lot of money. So yeah, that's actually cool. Our sales tax is a little higher, not a whole bunch from California, but no income tax.
Right, absolutely. And it kind of going along with the weddings, the theme we're talking about, marriage here. Summer's obviously a huge time,
big time,
to get married. And we talked a little bit about some tax advice. But what other pieces of advice do you have for newlyweds?
Well, I mean, I would say talk about money. I know that's a horrible thing to do, but decide, are you going to have separate bank accounts and then a joint one that's going to pay the bills? What kind of independence? Both of you may have a retirement account already, right? At what point are you going to change the POAs on those for your spouse now because you're married? Tell them where the money is. Do you have a lockbox where all those papers are going to be kept? This is not necessarily tax advice. This is just good financial advice, because taxes in itself, the first year is not going to change a whole bunch unless you go out and buy a house. You may then itemize, and then when you're itemizing, you'll have contributions and different things. But you really do want to sit down. One of the biggest problems I have in dealing with taxes and then end up with either marriage or divorces is that no one seems to know where the money's coming from and where it's going. It's very confusing for someone like me.
That sounds like it.
I want the banks reconciled. I want everyone to know. But it may be a great idea to have separate bank accounts and then a joint one held for all the household bills.
That's a great piece of advice, absolutely. Well, we are going to take a quick break, but give us a call if you have any questions, 737-7587. Dr. Friday taking your calls for the next hour or so. So give us a call, but we'll be right back.